Hello, everyone. Thank you for signing up for the webinar today. My name is Suleiman from Core, a mining consultancy based in the UK, but also the developers of the iMine platform. Sorry we couldn't do this live, but during a test run earlier, we encountered some internet difficulties, so we decided to pre-record the webinar and make it on demand. I'm delighted to be joined by Adam, an analyst from Roskill, to be the lead voice on today's Outlook on Tin. Adam will be giving a presentation, and then afterwards, I'll be putting some questions that was sent in during registration for him to answer. Also, Adam will provide his email, so if you do have a question you want to send to him, we'll be happy to reply to you offline. Without further ado, I will hand over to Adam now for the presentation. Then if you can share your screen, that would be great.
Brilliant. Thank you very much for the introduction, Suleiman. So yeah, as someone introduced, I am Roskill's lead on tin, and I also cover our tungsten and antimony markets. So yep, today we're going to be giving an outlook on tin, and let's go. So this is just a standard disclaimer, as we're making some forward-looking statements throughout. So I'll give a short outline of the webinar. We'll be starting with just a short overview of Roskill. Then I'll be unpicking the recent price developments. Then we're going through some recent market trends, a market outlook, a deeper look into several first use applications, and then a summary. So I'll start with the Roskill overview. So first, looking at Roskill's tin analyst. Our latest Outlook report to 2030 was released last September, which is our 12th edition. The 13th edition set to be released this August. This report covers the tin supply chain with global production costs, consumption, international trade, prices, outlook, and several appendices, including key industry players, country profiles, key first and end uses, and our macroeconomic outlook. It's available via our online platform and includes a downloadable data pack, quarterly updates, access to our analyst team, access to Roskill's white papers, and on-the-road slide decks. So Roskill's other multi-client reports cover around 40 commodities over a range of products, analyzing all steps of the industry and value chain, including project analysis, market analysis, cost analysis, and first and end use analysis. So as I said, we're going to look into the recent price developments. So tin prices have experienced an eventful 12 months, to say the least. A year ago, tin prices collapsed to a 4-year low of $13,375 per ton. And this collapse came shortly after the COVID-19 outbreak was declared a global pandemic, and large parts of the world were hit by lockdown restrictions to slow the spread of the virus. Prices rebounded relatively quickly to pre-pandemic levels, reaching $17,000 per ton in late Q2 2020. LME cash prices enjoyed near consistent growth in the second half of 2020, closing out the year at $20,540 per ton, and largely as COVID-19 cases fell worldwide and restrictions were eased. Into 2021, the price momentum has continued despite restrictions returning, with LME cash prices exploding to around $30,000 per ton, and prices have oscillated around $25,000 to $30,000 per ton since, with prices hitting a 10-year high of $30,900 per ton this month. So 2020 basically created the perfect storm for tin prices, and we'll look deeper into recent supply and demand trends shortly. But in 2020, mined and refined tin came under substantial pressure, and that's largely due to obviously the COVID-19 pandemic. Mine supply fell year on year by nearly 17%, whilst refined supply fell year on year by nearly 10%. global demand did not escape the impacts of the pandemic either, falling year on year by around 5%. As a result, the already moderate market deficit widened in 2020, and demand has shown strong recovery through the second half of 2020 and into 2021, buoyed by recovery in the consumer electronic market. So as demand has recovered, tin stocks have come under increasing pressure, with LME stocks falling as low as 775 tons, which is less than the equivalent of 1 day of global consumption. With stocks under pressure, global supply under pressure, and continuing demand growth, prices have exploded along with physical premiums. Now, despite some minor restocking, LME stocks currently around 1.5 to 2 kilotons, the market dynamics remain largely the same, with prices still oscillating around 25 to 30,000 kilotons, sorry, 25 to 30,000 dollars per ton, and physical premiums as high as $1,000 per ton in the US and Europe. So now let's look into some recent market trends. So global primary tin supply peaked in 2017 at over 300 kilotons and has remained sort of below this level ever since. Mine production across the 3 major primary tin producing countries, China, Indonesia, and Myanmar, has been the main contributor to falling output. So Chinese mine supply remains the dominant source in 2020. However, it has dropped in recent years, falling by around 7% per year since 2016. Indonesian supply has risen in recent years, overtaking China in 2018 and 2019, and driven by state-owned producer PT Timur increasing output. However, PT Timur cut output by around 30% in 2020 as a result of the COVID-19 pandemic and management and strategy changes. In the last decade, Myanmar has emerged as a major source of primary tin. Production peaked in 2017 and has fallen by roughly a third since. Now, China's falling output has been supplemented by this emergence, with almost all of Myanmar's tin concentrates exported to China. South American producers have made up the bulk of the remaining mine supply, with output remaining relatively consistent, barring a drop in 2020 due to COVID-19 related mine closures. So since 2016, refined tin supply has generally been on an upward trend, peaking at around 370 kilotons in 2019. However, in 2020, global refined supply dropped for the first time in 5 years, falling to around 335 kilotons. Unlike with mine supply, China's dominance as the leading refined tin producer has remained consistent for some time. Chinese production peaked in 2017, but has been on a downward trend since. Despite this trend, Chinese production has relatively consistently remained around 50% of global refined tin. Indonesian refined production enjoyed a period of strong growth since 2016, with PT Timur actually becoming the world's largest refined tin producing company in 2019. However, like with mine production, PT Timur cut refined tin production by around 30% year on year in 2020, again as a result of the impacts of COVID-19 and management and strategy changes. PT Timur's production drop accounts for a significant proportion of the drop in global refined tin supply in 2020, and Yunnan Tin has returned to the top spot as the leading producer. So moving on to demand, 2020 marks the first drop in tin demand for several years after a period of consistent growth. This drop, unsurprisingly, can be attributed to the impact of COVID-19, which have felt across all demand markets, and particularly that of solder, falling at around 7% year on year. Solder applications consistently account for a larger proportion of global tin consumption at around 40 to 45%, with around 90% of this attributed to electronic solder applications. Prior to 2020, growth had been relatively flat for most sectors, since around 2016, with consumption in solder growing at around 1% per year. However, two markets have shown strong growth. The first of which is the consumption of tin in chemical applications, which has grown at around 8% per year prior to dropping in 2020, with around 40% of tin consumption in the chemical sector attributed to PVC stabilizers. The second market to show strong growth prior to 2020 was the use of tin in lead acid batteries, showing growth of around 6% per year. Tin has increasingly been used to substitute antimony and lead acid batteries for several years to increase mechanical properties of the battery. So now we're going to look forward. So the trend of China and Indonesia dominating mine supply is set to continue, with output from both countries set to remain at roughly half of global supply moving forward. Output from Myanmar is set to continue to deplete over the next 5 years, and its position as third largest mine producer will come under threat. South American output is set to largely remain consistent, with Peruvian output set to drop slightly. Now, the largest difference over the next 5 years is set to be under the other countries category, and I'll break that down in the next slide, with Europe, Africa, and Australia all set to gain a much larger market share. So in recent years, growth has been mainly focused to obviously the major producing countries, and with slow growth outside of these countries. However, 3 regions, as mentioned, are set to considerably increase their market share over the next 5 years. So African output is set to roughly double by 2025, growing at around 10% per year. Now, Alphamin's DRC-based BISI project is set to drive a large proportion of this, with Afritin's Namibian-based OOS project also contributing. European output is set to nearly triple by 2025, rising by around 24% per year. And several British and Spanish projects are set to drive this, including Cornish Metals' South Crofty project, Cornwall Resources' Redmoor project, and Elementos' Oropesa project. Australian output is set to more than double by 2025, rising at nearly 17% per year. And again, several projects are set to drive this, including Bluestone Mines' Rentals project and Oztin Mines' Taronga project. So global refined supply is set to continue the upward trend seen prior to 2020, with global supply to return to above 400 kilotons. China and Indonesia output is set to continue to lead the way in the period of 2025. And after several years of decline, Chinese output is to rise by around 2% per year, with most growth set to occur in the period of 2023 before leveling out. Indonesian output is set to continue the rise seen prior to 2020, growing at around 3% per year. Now, China's Yunnan Tin and Indonesia's PT Tin, currently the two largest producers of refined tin, have both heavily invested in improved smelters in recent years, with Yunnan Tin's new Jeju City smelter coming online in late 2020, whilst PT Timmer's new Bangka Island smelter is set to come online later this year. So global refined tin consumption is set to rebound relatively quickly from the impacts of COVID-19, reaching 400 kilotons in 2021. Now, in the near term, refined tin consumption growth is set to slow before picking up from around 2024-2025, with average growth across the next 5 years at around 2.5% per year. Consumption in tin and solder applications is set to continue to dominate total consumption at around 40 to 45%, with around 90% of this as electronic solder. Electronic solder is set to show modest growth over the next 5 years at around 3% per year. However, this is set to be offset by poor performance in tin consumption in industrial solder, which is set to decline by over 8% per year to 2025, and we'll come on to that a little bit later. Modest growth is also set for tin consumption in lead acid batteries at over 4% per year, float glass applications at around 3% per year, and chemical applications at around 2.5% per year. So as discussed earlier, 2020 was a pretty eventful year for tin, and the substantial deficit between supply and demand played a leading role. This deficit is set to be more than halved in 2021, with refined supply set to recover to a greater extent than demand. Looking ahead, the deficit is set to continue to drop into 2022, where the market is set to be largely in balance. The market balance is set to swing to a surplus from 2023 onwards, with demand growth slowing, whilst refined supply continues to grow. The surplus is set to reduce in 2024 and 2025, however, as demand once again picks up. So now, as mentioned, we're going to look into a few of the first use applications a little bit deeper. So starting off with solder, we've already mentioned electronic solder currently accounts for around 90% of tin consumption in solder, whilst industrial solder accounts for around 10%. Both electronic solder and industrial solder to experience pretty differing prospects over the next 5 years. Electronic solders are set to rally at nearly 3% growth per year, whilst industrial solders applications are set to suffer from a decline of over 8% per year. Now, this decline is set to be down to several factors. The first of which is tin-containing solders, which have historically been used in the joining of components and in automotive radiators and heat exchangers. Plastic fillers are increasingly being used as a substitute for those solders. A second factor is an increasing number of other markets. Lead-containing solders are no longer used in the manufacture of food processing equipment or cans. And in several regions, there's also a complete ban on the use of lead-containing solders in household water pipes. And finally, the use of both low and high tin solders on side seams of steel cans has largely ended following the adoption of drawing and wall ironing to produce a one-piece can body. So now looking onto electronic solder, as mentioned in the last slide, tin consumption in electric solder is set to rise at nearly 3% per year in the period to 2025. Now, smartphones mark the largest consumer electronic device market by shipments, and smartphone shipments have been on a downward trend for several years. However, this is set to end, and strong growth is now set for across the next 4 years at around 3.5% per year. In the last decade, smart home devices has emerged as a substantial market for consumer electronics, and despite a drop in 2020, this trend is set to continue over the next 5 years at nearly 4% per year. However, it must be noted that smart home devices have around half the amount of tin in as smartphones, which have around 2 grams of tin in, and a third of desktop PCs, which have around 3 grams of tin in. So several smaller markets are showing signs of resurgence, such as PCs and notebooks, which have enjoyed growth as a result of increased working from home trends. However, it does remain to be seen if this resurgence continues after COVID-19 restrictions are lifted. So moving on to chemicals, tin consumption in the chemical sector has enjoyed modest growth in recent years. This trend is set to continue in the period of 2025, with growth of around 2.5% per year. PVC stabilizers accounted for over half of consumption in the chemical sector in 2020, gaining an increasing market share over recent years. This trend is set to continue, with PVC stabilizers driving a large amount of growth in tin consumption in the sector. Now, catalysts and the glass industry account for the second and third largest consumers of tin in the chemical sector, both of which are relatively mature markets and are set to remain relatively stable with some marginal growth. Most smaller sectors are also set to remain relatively flat looking forward, but there is potential for some slow growth. So now moving onto batteries. For the short term at least, valve-regulated lead-acid batteries, or lead-acid batteries, are to remain the only battery application for tin. So lead-acid batteries have experienced substantial growth in recent years. And this growth is set to continue to 2024, with production peaking at around 425 gigawatt hours per year. Now, this production growth, combined with continuing substitution of antimony with tin, is set to drive strong growth for tin consumption in lead-acid batteries. But lead-acid battery production is set to peak in 2024, with many looking to eliminate the pollution and injuries that come from smelting, making, and disposing of lead-acid batteries. However, tin consumption is set to continue to rise beyond this peak, with continuing substitution of antimony with tin, and growth of over 4% per year to 2025. Now, tin is in the battery conversation for more than just lead-acid batteries. There's increasing interest about tin's potential for use in lithium-ion batteries. And research is regularly published on the subject, with a high focus on tin-based materials as an anode material for lithium-ion batteries. Deloitte has recently published a study into EV trends, and one section looks into consumer priorities and concerns, with driving range either the first or second greatest concern in all regions of the study. So to counter this concern, the capacity of the anode must increase, with most anodes typically graphite-based. Now, one piece of research led by Nobel Prize winner Stanley Whittingham, who's widely regarded as one of the key figures in the development of lithium-ion batteries, has highlighted a tin iron carbon anode. This anode composite was found to have a lower price, superior discharge, and superior charge rate capabilities of roughly double that found in graphite-based anodes. The study has noted, however, that improvements are still required prior to commercialization, mainly focusing on capacity. So there's a general consensus that we aren't likely to see any commercialization of tin-based anodes for lithium-ion batteries until around 2025 at the earliest. Now, beyond 2025, consensus sort of varies considerably, with some forecasters bullish as seeing 60 kilotons per year of tin used in lithium-ion batteries by 2030. Now, the rapid rise of lithium and graphite consumption over the last decade, as can be seen in the graph here, and the phasing out of vehicles using internal combustion engines indicates that 60 kilotons by 2030 is not completely unrealistic. Okay, great. So just gonna go through a quick summary of the points from the webinar. So the market conditions underpinning recent price surges remain largely in place. As a result, tin prices are set to remain volatile in the short term at least. The market balance is set to swing to surplus in the short term after several years in deficit. As a result, prices may lull in the short to mid-term. The future does look bright for several key demand markets though. Tin consumption in electronic solder is set to continue to rally, with strong demand set for consumer electronics. Chemical applications are set to continue to rise, driven by a strong market for PVC stabilizers. Battery applications offer an exciting opportunity for tin, with consumption of tin in lead-acid batteries set to continue to rally, and development opportunities for tin and lithium-ion batteries are poised to alter market fundamentals for tin in the mid to long term. Okay, great. So now I'm going to pass back over to Suleiman for a short Q&A.
Thanks, Adam, for that insightful presentation. First, while you were doing the presentation, I noted down a few questions of my own. So if you don't mind, can I put them to you?
Of course, yeah.
Cool. So you mentioned demand fell due to COVID-19. So in the medium term, do you think the high prices will affect demand?
It's not necessarily. So a lot of tin applications are highly inelastic. For example, looking at sort of consumer electronics, that the high price isn't really going to impact tin when say it's a couple of cents of tin going into a mobile phone. So generally speaking, I wouldn't imagine so, no.
Okay, cool. And another question is, yeah, you mentioned new production of tin concentrates coming out of Africa, Namibia, DRC. Have you factored in Rwanda, maybe Nigeria, or what kind of tonnage do you need to see coming out before you factor them in your forecast?
So yeah, they all do definitely factor into the forecast, and as you mentioned, yeah, Rwanda and Nigeria are definitely part of that. Off the top of my head, I couldn't give you numbers of what we have forecasted in our model for them, but they definitely do play a large part. It's just Namibia and DRC are sort of leading the way, but they've definitely got a part to play.
Oh, cool. And also, the political climate in Myanmar, will that accelerate things? Will that affect tin coming out of the country and potentially the price?
So it's a bit of a funny one in Myanmar. Sort of around about 80% of production in Myanmar is sort of focused on the autonomous Wa region, and now they are completely isolated from the sort of current political ongoing events. So whilst we don't really expect there to be that much impact on that sort of large proportion of sort of supply from Myanmar, there could be sort of slight impacts with sort of several land borders between Myanmar and China closed. Now, supply coming from Myanmar into China, especially from the Wa region, isn't expected to be impacted. However, some of the sort of materials used in the mining processes, and yeah, basically, we're expecting that there may be some sort of disruption coming the opposite way into Myanmar, but that's predominantly focused on the land borders that are outside of the Wa region. So generally speaking, we don't expect it to have that much impact, but there may be some sort of mid to long term sort of towards in regard to this year, sort of looking towards the second half of the year, we may see something. But again, it's the tin production in Myanmar is largely isolated from the political events.
Okay. And I mean, if I can take your memory back to when we are having the chat on developing this webinar, we mentioned at the early stages of this year and late last year, the prices were, I mean, they were going up, but slower than expected. But there was a huge boost in, there was a huge uptick in prices in early March or end of February, around early March. What was the cause of that?
Ooh, good question. What was to cast my mind back? So off the top of my head, I honestly can't remember. A lot has changed in the past year.
Yeah.
I remember that sort of towards the sort of late stages of 2019, sort of from around September onwards, there was a major sort of group effort from several of the larger producers, especially in sort of Asia, China and Indonesia, that they cut production in response to falling prices. But in sort of February and March, I think maybe it was a bit of recovery sort of related to that, but I couldn't give you a specific answer, sorry.
No, that's fine. Maybe we can continue the conversation offline.
Definitely, yeah.
Yeah. And actually, yeah, going on, There's a lot of chatter with other metals, other commodities of a super cycle, that we're going into a super cycle. Would that also translate to the tin market, or is tin kind of insulated from other commodities?
No, I think tin is definitely involved in conversations of super cycle. I'm seeing a lot of suggestions that some of the main metals involved could be tin, copper, tungsten. So yeah, no, definitely in the mix in metals that could be involved. So it's really exciting times for tin.
Okay. Right. So let me read out a few questions coming in. Well, when they were during registration. So this is from a project owner in Africa. He was asking, since normally price is the best geologist, that's when we normally see projects being developed or investors investing in projects. Do you see any new projects coming on, or during your research, are there any chatter about investors looking for tin projects?
Yeah, I guess as you say, it's all about price. Now, for sort of the last 10 years or so, well, and longer, I guess, it's been sort of more of the sort of fluvial deposits, sort of the ones that we see in sort of Asia, sort of like Indonesia and stuff. Now, for say sort of hard rock deposits, I think the price does need to rise, and whether it does remains to be seen. But yeah, look, I mean, like we're seeing a lot of projects that are definitely sort of in the mix to come online. But again, yeah, it depends on money as always.
And well, maybe you touched upon this on your presentation, but let me just ask it anyway. Are the current tin mines project sufficient enough to meet the demands targets for clean energy or for its application in the lithium-ion batteries?
So can you repeat that, sorry?
Well, it's saying, are current tin mines or projects sufficient enough to meet the demands?
It all depends on how much, basically. Now, from our sort of long-term projections, we're expecting there to be a sort of lull in the midterm, but sort of from say 2025, 26 onwards, if the applications to lithium-ion batteries do take off, that there could be massive shortages sort of towards the end of the decade, and that will send the price rocketing potentially.
All right, that's quite interesting. All right, and one more question. Let's see. I've kept you long enough. Right, okay. Who would be the key driver in tin being used as a battery metal? Would it be China or would it be America?
Good question. Yeah, I guess it's one of those things. It's who gets to it first. But obviously, both countries are investing heavily in sort of battery infrastructure. If I was a betting man, I'd probably go with China. But I mean that's purely because of the major supply base. But yeah, I'm gonna stand on the fence on that one, I think.
I mean, I would agree with you since I remember reading China installed over 112,000 electric vehicle charging points, or are
Yeah.
planning to. So yeah, the market tends to move at China's speed.
Yeah, no, yeah, definitely.
Right, Adam. Well, thank you for your presentation and thank you for that. And if you do want to get in touch with Adam, his email is up here and he'll be happy to respond to you. And actually, one more thing that you mentioned the tin reports that Roskill does at the start of the presentation.
Yep.
Is that free? How much does it cost? Or how do you get involved? How can someone get access to that?
Yeah. So basically just sort of send me an email, and I can definitely put you in touch with our business development team. And yeah, that's definitely the best way to go about it.
Cool. All right, thank you everyone for joining us today. Look out for more battery metals webinars on copper, lithium, cobalt, and other minerals that hopefully with Roskill we will be able to put across to you. Thank you. Bye.